Okay, everybody, it's me, Gregory Mannarino. We have to talk, and I mean seriously. Let me put this into perspective for you before I even tell you the date, okay? That's how important this is, and I want to get it out. This week for the market, well, in my opinion, is a make or break moment. I cannot overstress to you how important this week is going to be and why. Well, we're going to hear from public enemy number one regarding monetary policy. I'm talking about the Federal Reserve. So let me back up just a moment here. It is Sunday, January 23rd, 2022. I want to get that out. So as I said, what a week we can expect for this market. And in my opinion, the volatility that we've seen as of late in this market, I want to cover that a little deeper here. We're going to see whether or not this is, something much bigger. Is this market about to really crater? Or is this market about to rebound in a big way? We're going to find out this week, and I'm going to tell you, well, I've already alluded to this. My take on it, hold that thought, okay? Let me cover some other things first. I want you, look, there's a lot of people who are, I'm going to say panicking, all right? And I can tell you that from the comments, from my email box, people are reacting, in my opinion, well, they're overreacting to what's going on here in the markets. What has happened here in the markets? We are now 23 days into January. We just came off of a year, last year, where the S&P 500 hit more record highs in history. It was a historic year. Now, think about what I'm going to tell you here. Those of you who are panicking and are filled with despair, fear, whatever it might be, and I know where it's coming from. Again, you got so-called stock market experts out here calling for a market crash every week, every month. This is the big one. This is it. Meanwhile, they're not talking about the debt market at all. All they're telling you to do is look at the stock market. They have no idea what they're looking at. All right, with that said, let me put this into perspective for you real quick. I was writing down a bunch of stuff this morning. So as I said, 2021, we are now 23 days into this new year. An epic year for this market with, more record highs than we've ever seen before. Meanwhile, again, those same people calling for crashes, they were obviously wrong last year and the year before that and the year before that and the year before that. They have a track record of being 100% wrong. I want you to think about that. So right now, okay, the Dow Jones Industrial Average is only 6.8%. 6.8%, people, off of an all-time high. 6.8%. You got the S&P 500, 8.3% off of an all-time high. The NASDAQ, about 11% now. The small caps, yes, have taken the biggest hit here, down about 18%. When was the last time you heard Greg Mannarino tell you to own small caps? How about never, okay? I've been advocating to all of you to own large cap dividend paying stocks, okay? And if you've been paying attention to what I've said, how to work these things, you're sitting pretty. You've been sitting pretty for freaking years. The small caps, yes, have taken a big hit here. We're talking about mostly domestic companies right here in the United States. Our economy is in free fall. This is a global phenomenon here. And I think you all know that. But again, the lies, the distraction, the propaganda, we're booming, we're doing great. But again, think about what we're talking about. Those of you that are panicking, those of you that are so afraid, we're not far off of record highs. It's insane. You think this is really the big one? Those of you, some of you really do. Where are you getting this from? Let me explain this to you real quick. I run, this blog and my own portfolio as if I were a fund manager. And if any Wall Street fund were dumping stocks or running for cover out of a market where the Dow is only down 6.8%, the S&P 500 is only down 8.3%, and the NASDAQ is down 11%, well, they'd be out of business real fast, okay? This is normal. Normal market behavior. Markets go up, markets pull back once in a while. And pullbacks, especially like this one, are bullish. Bullish. You know, hold that thought too, because we have to talk about crude. Now, as I said in the beginning of this video, we're going to hear from the Fed this week regarding monetary policy. I believe the Fed is going to announce some kind of rate hike here. Now, with that said, it will be meaningless. The market is going to look at that, and in my opinion, it's going to rally, go higher after the Fed announcement. Now, look, am I right all the time? No, absolutely not. Am I right the vast majority of the time? Well, ask anyone that's been with me for a certain amount of time. Look at my track record. Yeah. I am definitely right the vast majority of the time. With regard to the Fed, I have been wrong twice. 2 times ever since I've been out here, well over a decade. Will I be wrong this week? I guess that will will remain to be seen. But I believe that once the announcement is made, the market will rally. Now, in the event that I am wrong, and the Fed makes an announcement and this market falls, if that does happen, you can expect the market to fall, I would say, I'm not going to say substantially more, but definitely, well, it's something we're going to keep our eyes on here. But again, what are we going to do? Let's throw out a hypothetical here. Let's say Greg is wrong, and the Fed makes their monetary policy announcement this week, and the stock market falls under some pressure. What are you going to do? What are you going to look at? You're going to look at the drivers. What are they telling us? What's the debt market saying? What's the 10-year yield doing? The yield curve, the MMRI, the Dixie, the relative strength of the dollar. These are the things that I will look at in the event that I'm wrong. And in the event that I am correct, well, I'm still going to look over there. I want to see what the debt market is telling us. The debt market is the driver, number one, of the market. You know, with that said, let me show you a lovely chart I made up. This is right off of the Federal Reserve's website. This is a 1-year chart of the Federal Reserve's balance sheet. What do you notice? What do you notice? It should be in your face. How about it's skyrocketing. This is the Fed's balance sheet. This is the driver of the market. This trend will continue. With that said, where do you think the market's going to go? If the Fed is going to continue to inflate people. Look, the narrative is still the same from the mainstream. Oh, the Fed is going to raise rates. It's going to help inflation. No. Energy and food inflation is out of control. Not just that. Supplies are also like companies, for example. Let me just read this to you. This is epic. Materials costs are out of control. And just to put a little light on this for you, since September of last year, lumber prices are up 45%. 45%. It's unbelievable, people. It's completely out of control, and the Fed has no interest at all, regardless of what you're being fed by the mainstream, that, oh, the Fed cares. The Fed really cares about inflation. No. They have deliberately created this. They've deliberately overshot their 2% target by hundreds and hundreds of percent. We're at 7% right now. You think, honestly, that this is by accident? Because that's what the mainstream wants you to believe. Oh, yeah, you know, the Fed overshot. We didn't just overshoot a little bit. We overshoot on an epic scale. And it's not done whatsoever here. And even if, when the Fed raises rates, and they're going to, this thing here, it's not going to stop. Look at it again. Look at this. And if you think I made this chart out of thin air, I've had people write to me and tell me, oh, Greg's making these charts up on his own. Go to the Federal Reserve's own website, Google, or go on one of your search engines and look up the Federal Reserve's balance sheet. You can see it and you can pick a timeline. Here, this is right off of the Federal Reserve's freaking own website. You see, the truth is hidden in plain sight 99.9% of the time. You understand? I think you do. At least I hope so. Anyway, I want to touch on crude oil here. WTI is around $85 a barrel. We recently touched 87 WTI, West Texas Intermediate. This is the one that the market follows for the most part. At least I do. It looks like a setup to me for this for crude to make a big move higher. Again, we've been in an unbelievable uptrend. We went to $61 recently, okay, and then we shot off of that like a rocket, okay. Right now, I won't even call this a pullback. We went from $87 to $85 here with regard to WTI, but this is bullish, okay. Don't just listen to Greg Mannarino if you don't want to, but you got major institutions out here, and it should be obvious to you. Why is crude oil surging along with everything else? It's a dollar that is dying, okay? The dollar is in free fall. The same way that this is moving up, this is what the dollar is doing. Down, okay? It's actual strength, not relative strength. Its relative strength is higher. Its absolute strength is cratering. And because crude oil, again, is priced in dollars here, along with everything else. Again, there's a lot of geopolitical stuff going on. One of my top trends for 22 was energy was going to surge higher, and it's going to. So that's where we're at, people, with regard to most aspects of this markets here. It's incredible to me, materials costs surging like this. Lumber prices up 45% since September. The Fed will continue to inflate, and you can count on it, people. I'm not going to go back to that chart again, but it says it all. And debt is the number one freaking driver of this market. Anyway, let's touch on a few other assets here. Cryptocurrencies have gotten blasted over the last over the weekend. I mean, Bitcoin is around 35,000. Now, what I want you to do, those of you that are going to make stupid comments, look at the price action of cryptocurrencies and Bitcoin since forever. Yes, we have made like a 50% retracement here, a pullback with regard to Bitcoin. But how many of you recall when Bitcoin hit 18,000 and Greg Mannarino at that time said, dump it, dump it. You don't believe me? Google it, okay? I'm on public record with this. I said to dump Bitcoin at 18,000. We plunged down to like 5,000, and that's when I said buy, and I told you again to buy at 3. But this, look what happened to it. We plunged and we skyrocketed to like 65. This is how volatile the crypto space is. All right. It is absolutely not for everyone, and people can't handle that kind of stuff here. This is what you have to understand too. Cryptocurrencies are not widely held, and relatively they are thinly traded. So you get these massive swings in the price action of cryptocurrencies. It should be to be expected. I said recently, if Bitcoin would have dropped to 33,000, I would buy more, and I stand by that too. Right now, I have not added to any of my crypto positions, and I will moving forward. Just not yet. I knew there wouldn't be anything wrong with doing so. I mean, if you're someone who holds cryptocurrencies, as I do, as a lot of you do, and if you want to average it down, of course you can do that. Again, why are you and I holding assets like physical gold, physical silver, platinum, palladium as well, and cryptocurrencies? Because we're holding it for the debt market implosion. The debt market implosion is a guarantee, is going to happen. Period, the freaking end. So again, how it works is risk on will turn risk off. In my opinion, we are still in a bull market. This is a bullish event that we've seen lately with regard to this market. Again, what do we have going on that people are panicking about? I want you to think about it. I really do. People are freaking out because the Dow Jones Industrial Average is down 6.8% off of a record. The S&P 500 is off like 8% off of a record. The NASDAQ is down 11% off of a record. And this is what's got people all crazy right now. Honestly, people have turned into mush, worms, and they can't handle anything. It's part of the American psyche, I think. They can't handle anything. They run to their safe spaces. They go suck their thumbs. They don't know what to do with themselves when things just don't go the way they want it to. Okay, there's no rule here that says stocks go straight up, and pullbacks are bullish. How many times have you heard me say that? Those of you that have been with me for 1,000 years, or at least a decade or more, and this market, every single time it's pulled back, it's gone higher, and it's debt that's fueling this. If you believe that the constant, relentless flooding of debt on a global scale is going to stop, well, then you need to really get out of the market. But if you believe, as I do, that there's no way on earth or off the earth that this flooding of debt is going to stop, it's going to continue and probably get worse, well, then you definitely need to still be in this market. You need to be buying the dips. And like I said, look, this week will make or break the market, okay, in many, many ways. And we'll address that issue when we get there, which will be this week, if in fact, okay, and just keep this in mind, all right? I'm giving you my best information based upon what I see happening, okay? And my best guess right now, the odds are that this market, at least in Greg Mannarino's opinion, will rally off of a Fed rate hike. Okay, I think that's what the market's been waiting for. That's why we've seen all this volatility. And that's why we have the major stock market indices down. Nothing major, okay? Russell 2000, okay? The small caps is down 18%. All right, but again, I don't trade these things. I don't even look at it. I'm looking at more companies that trade globally as opposed to those that are domestic. You understand? And most of you who have been with me understand I've never advocated to buy small caps here. Anyway, with that said, let's see how this plays out. If in fact, again, Greg is wrong and the market drops off of whatever the Fed does and it falls further, we will readdress the market issues at that point. But we're going to look at the debt market. The debt market's going to tell you and I what's really going on. The debt market is a leading indicator, period, the end. I think all of us know that here, at least understand the market. And realizing that the stock market is a derivative here, meaning it derives value from action in the debt market, it makes our lives very simple. Very, very simple. Keep your eyes, that's another thing here. When the announcement here comes out from the Fed, watch the MMRI. You should be watching this every day. There's a link to the MMRI in the description of this video, the Mannarino Market Risk Indicator. There's not a better market risk indicator anywhere, period, the freaking end. Keep your eyes on it. If you have, you've noticed that risk in this market has in fact dropped. So I can't tell you how excited I am for this week. Am I nervous to be wrong? Not really. Again, my record is pretty outstanding. And if I am wrong, we will just readjust the way we are understanding things. But I really think that the market is waiting for the Fed to do something. And when it does, it will react favorably to that. And if I'm wrong, like I said, we'll readdress this. It'll be interesting, and we will address it at that point. People, this guy here loves you a lot. Kind of a long video. I do apologize for that, but I had a lot of stuff to cover here with you. Let me know what you think. Really, let me know what you think. Here's the question, and I will read the comments. Will the market rally off of a Fed rate hike, or will the market drop off of a Fed rate hike announcement? I want to hear from you. And look, I'm not too old to learn something, believe it or not. I may be an old guy, but I'm not too old to learn something new. All right, with that said, again, love all of you. I will see you in the morning.